EMFX, we see the Rupiah hitting the lowest since the Asian crisis. Questions again over whether there's contagion. When I look at Argentina and see the fact that it's hiked rates to the highest in the world, and then you look at Indonesia, where the central bank has raised rates 4 times since May, you start to ask the question, is hiking rates actually the answer to stop these losses in EMFX?
Yeah, and that's a very good question, Mira, because we've seen Argentina do it, as you point out, Indonesia do it, and even Turkey try to do it. And, it really is kind of a question of markets testing central banks and testing how far they're willing to go to protect their economies and their currencies. But then also there's this combination of other fundamental issues, for instance, in Argentina and Turkey, the extent of which not really what you're seeing in a country like Indonesia, where growth is still good, the economy is developing, it has a young population that has a lot of potential to fuel that growth for years on end. And so when you take into account all those other fundamentals, apart from the fact that their central banks have done very similar things, then that's where you can start to see, okay, maybe there's a way for these currencies to diverge from each other as this all plays out.
Henrietta, let's get your thoughts on this. I've got a chart here, or a function here on the Bloomberg. This is WCRS, emerging markets year to date, and you see some of those poster children for the emerging market crisis very clearly at the bottom there. Argentinian peso, Turkish lira, Brazilian real, the rand in there as well. I was drawn to something you said in your notes ahead of our conversation, which I thought was really interesting, and that is that investors are still, in emerging markets, still in the mood that things could still get cheaper tomorrow. To Christine's point, though, surely there is differentiation within that statement, though. I mean, it could get cheaper in some places and less so others.
Yeah, I think you've got a variety of fundamentals on the emerging market side, and not all countries are in the same situation. What we've seen is the weakest shoes drop. Argentina, closed economy, an economy that is in transition from a consumption economy to something, and you're looking at deficits as well, and it's an economy that's not very integrated into the capital markets, so a weak link. If you look at Turkey, there for me it's a slightly different situation, equally very specific to Turkey. Again, you've got deficits, but also you've got a political situation which is difficult, with Erdogan concentrating power around himself, and question marks about the independence of the central banks, to your point about the markets testing. So I agree, if you look at Argentina, Turkey, they are in a way idiosyncratic stories in their own right. However, we are in an environment which is a bit more difficult than it has been in recent years for emerging markets because of the strength of the dollar and because of US rising rates. So.
Christine, is this as simple as investors just shying away from economies with current account deficits? Because Indonesia has that, similar to Turkey.
Yeah, it's certainly a big part of the issue because, it's something that we saw in a few years ago during the taper tantrum era in 2013, where a lot of the countries that do have weak current account deficits were the ones in focus, but then they were rewarded, those ones that were made vast improvements on that front were rewarded eventually and managed to rebound. And so it's current account deficits, certainly one of the aspects that investors are looking at. But to Henrietta's point, there are also other factors that investors might want to be taking into account. For instance, the political situation in each countries, the central bank situation in each of these countries, and kind of looking at that all together and making an assessment of who is best placed to weather the storm.
Yeah, and any turnaround in the dollar's trajectory, of course, also. I mean, Henrietta, this seems key. Even if we got rid of all the idiosyncratic risks around every emerging market, if we've still got a Fed that is hiking, and if the returns that can be made in the United States look the way they do versus the political instability in emerging markets, does little change.
Correct. I do think you need to see a change in the trajectory of the dollar to really become more confident about emerging markets. And you have to realize also in the background, you've got the trade discussions, and you've got the trade discussions with China.
And are we going to see that change in the direction of the dollar? Because it's been a little weaker over
It's been a little weaker. There it sort of turned yesterday. And you need... last year, if you looked at growth, it was all about synchronized growth across the world. Emerging markets, Europe, the US. Here you've had a bit of a divergence over the course of 2018, and that for me has been one of the drivers for the strength of the dollar.